Welcome to the FinTech One-on-One podcast. This is Peter Renton, Chairman and co-founder of FinTech Nexus. I've been doing these shows since 2013, which makes this the longest-running one-on-one interview show in all of FinTech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, Pitch It, the FinTech Startups podcast with Todd Anderson, and FinTech Coffee Break with Isabel Castro. Or you can listen to everything we produce by subscribing to the FinTech Nexus podcast channel. Before we get started, I want to talk about our flagship event, FinTech Nexus USA, happening in New York City on May 10th and 11th. The world of finance continues to change at a rapid pace, but we will be separating the wheat from the chaff, covering only the most important topics for you over 2 action-packed days. More than 10,000 one-on-one meetings will take place, and the biggest names in fintech will be on our keynote stage. You know you need to be there, so go ahead and register at fintechnexus.com and use the discount code PODCAST for 15% off. Today on the show, I am delighted to welcome back Evan Singer. He is the CEO of Smartbiz Loans. They are all about small business lending, as you could probably tell. And wanted to get Evan back because obviously it's been a very interesting time in the small business lending space, and wanted to see what is the state of small business lending today. Evan provides his perspective, talk about what he learned and the banks learned from the PPP program. He gives his perspective on the expansion of the SBA 7A program to more fintechs. He talks about the work they are doing with banks and also how the mindset of banks has shifted since the pandemic. It was a fascinating discussion. Hope you enjoy the show. Welcome back to the podcast, Evan.
Hello, Peter. Thanks for having me back.
Oh, my pleasure. Yes, it has been, it was December 2016 when we last chatted. So it's been a while. Maybe we'll get started by giving the listeners just a little bit of background about Smartbiz Loans. What is it you do? How do you describe it today?
So we are a platform. We help small businesses on one side. We help banks on the other side. And with small businesses, we help them build up to get a bank loan and then package that loan up once they're ready with a combination of technology and people, and then move it over to a bank on the other side of the platform. And our banks license software from us and outsource services. And we handle the underwriting and processing for small business loans for them and are able to make small business loans efficient and profitable for the banks that we work with.
Right. And so just to be clear then, you obviously, you can apply for a loan on your website. I'm on it right now, and it sounds like you can do that. So you're helping individual banks, it sounds like, with is it a white label type solution? Maybe you can tell us the difference between how you're working with the banks and how you're finding loans yourselves.
Yeah, most of our business is where we find loans ourselves. We have a host of different marketing avenues that we leverage, like TV and direct mail, and then a number of partners across the country will send us clients that are looking for a small business loan in particular, and typically a small SBA loan under $350,000, which is really our specialty. And we will work with that business, again, using a combination of tech and people to help them get ready and then package up their loan. And then we'll move it over to a bank on the other side of the platform. That being said, we do also help banks serve their existing customer base with more of a white label offering. But most of our business is where we're having businesses come to us directly.
Okay, so then maybe you can talk about the different loan products you offer. I mean, you talked about the SBA loan sub 350 as a specialty, but tell us what else that you offer.
Yeah, 3 main products for businesses. So small SBA loans, that's really our bread and butter. So under $350,000. These are typically priced at prime plus 275. It's a variable rate loan. It's got a 10-year term. Most of our customers use that for working capital, debt refinance, hiring, marketing, those types of use cases. And then we offer a conventional bank line of credit. That's unique. And we just launched that about a year ago. It's doing very, very well. And it is an interest-only payment for that particular line of credit. So we will offer lines of credit up to $100,000. It's got a very fast decision and turnaround on that product. It's fully drawn from day one. And then for the small business, it has interest-only payments for that term, and they can pay it down or they can borrow it up, and it's really a true line of credit. But one of the reasons it's so unique is that there's very few lenders that are offering IO payments on a line of credit. Mm-hmm. And so the monthly payment for that product can be extremely affordable for small businesses, and they can access that capital when they need it. And then the last product we offer is a 2 to 5 year term loan, again, through our bank partners. That is going to be a bit faster than an SBA loan. It will have a fixed rate, which many businesses want. As rates are going up, they're looking for something fixed versus something variable, which is how the SBA loans come in.
With interest rates going up, you said prime plus 2, and prime was what, 2-3% not that long ago, and now I was looking it up before this interview, and I see it's at 8. So, how often does it reset? Is it every month, or how often do those loans reset?
As prime goes up, the loans reset. That being said, with a $100,000 loan, if prime goes up a quarter of a point, the businesses don't see much in the way of an increased monthly payment. So because it has such a long term for our SBA loans, that 10-year term, I'd say that the monthly payment is still extremely affordable. And it might be, I couldn't tell you off the top of my head how much it goes up with a quarter point, but it's not much. And so, but they do reset. That being said, because it's a 10-year term, in 2-3 years, when rates hopefully come back down, if they come back down, then the monthly payments will come down as well.
Right. Okay. So I want to talk about the PPP, the Paycheck Protection Program, and your role in that, because obviously this was going back 3 years now, but still such an important time for anyone in the small business lending space like you guys. Tell us a little bit about what you did there and how that worked out.
We helped a lot of businesses during PPP. So we did a bit over 200,000 PPP loans for about $7 billion. And again, a similar model as we have now. So we did kind of the front end work for our bank partners, and then our bank partners originated those PPP loans. So a very similar method. We initially started where it was more of a white label offering. We were helping our banks serve their existing customers, as many banks did. And then we opened it up to new customers and helped quite a few. One of the things that we were very focused on during PPP was preventing fraud. We caught just as many fraudulent applications as we did funded loans. So
wow,
quite a few fraudulent applications.
That's amazing.
Yeah, it was rampant during that time. But we built machine learned fraud models, and we had a unique combination of automated fraud checks as well as manual fraud checks.
So I imagine that was quite an operation for you guys, because you're not a big company, and suddenly you're doing 200,000 loans in a pretty short amount of time. How was that operationally for you guys?
Oh, it definitely stressed us. Look, we all saw most of the big banks actually. The big banks largely did not lean into helping new customers, and so It was up to fintechs and a few of the smaller operators to help customers that the big banks wouldn't serve. And it stressed us. We hired several hundred temps during that time. And though it stretched us, we were still able to help over 200,000 customers. And so that felt really good to make sure that they were helped during that time.
Right. Okay, so then let's fast forward to today. And, we're recording this on the last day of the first quarter, March 31st. And would love to kind of get your sense of what is the state of small business lending today. And what have you seen is Are small businesses still borrowing money? Is demand high? I mean, what's the state of small business lending?
Yeah, look, for us, we're busy. We're having a good first quarter. We are finding that businesses want SBA loans. They've got long terms, low monthly payments. They want a line of credit where they can get an interest only payment. It's definitely, we're seeing the demand there. I think one of the unique things with us is that because we partner with banks to originate these loans, and the banks are lending off of deposits, they're not leveraging the capital markets. They aren't having to restrict as much as some of the non-bank lenders are on the credit side. Though that may be coming, we'll see, especially in light of what's happened over the last couple of weeks. We'll see if credit gets tightened with the banks that we work with. So it certainly could happen. We haven't seen it happen here in Q1, but we'll see what happens in Q2. The other thing that we've seen from a lending standpoint is we are helping many of our customers get employment retention credits.
Mm-hmm.
And so you asked before about product lines. I was just focused on the loan side. But from a small business perspective, if they can get a check from the IRS as part of the pandemic government stimulus program, it's a huge boon for the business, because this is not a loan. I mean, they're literally getting a check from the IRS. And for the banks that we work with, it's also a way for them to increase their deposits. And it's a way for them to help ensure that their small businesses have enough liquidity to get through a potential recession. And so we're seeing some demand for that as well, Peter.
Right. Yeah, I noticed that when it's right on your homepage there, you see the ERC. I mean, it's a great program. If every small business should be applying. It's not as quick as the PPP was. Anyway, then, I mean, obviously you're not holding anything on your balance sheet. The banks are holding these loans. But I mean, I'd love to know what kind of, I'm sure you're talking to your banks about credit performance. Is there anything that we can glean over the last 3 to 6 months when it comes to credit performance?
So we have not seen performance degrade in the last 3 to 6 months. I think folks are worried about it,
right?
But we have not seen performance degrade. Now, I will say the clients that we're helping and the folks that get a bank loan, whether it's a conventional bank loan or an SBA loan, they are typically the better quality credits. And I don't know about the poor quality credits if folks have seen a deterioration, but we have not seen it. Is possible that it'll happen in the back half of the year, but right now we have not seen it.
That's good to hear. Good to hear. So then, can you tell us a little bit about the typical Smartbiz borrower that comes to you guys? I mean, how big are they? I imagine it's across a variety of industries, right? But just tell us a little bit about your borrower base.
You're right. It is across a number of industries. We're in all 50 states, and a typical customer will be between 250,000 and 5 million in annual revenue. Our average is 1 to 2 million. They've got on average 5 to 10 employees, but we'll go down to sole props and go up to about 50 employee companies. But typically 5 or 10 employees. They've been in business typically for 5 to 10 years, but we'll go down to 2 years in business. And then obviously some have been around much longer than that. But it's really Main Street USA, Peter, is kind of think of a business with 5-10 people doing $1 million a year, profitable, growing, all sorts of industries, everything from a dentist and a lawyer to a retail store to an online store to a IT consultant to a small manufacturing facility to an export-import business. I mean, you name it. It's really across the board. We've got a couple TV commercials running right now. One is with 2 women that run a motorcycle shop where they sell gear, and then another with a woman that runs a doggy daycare in New York. So it really across the board. We do have about a third of our customers are women-owned businesses. And overall, over half of our customers are women-owned, minority-owned, and veteran-owned businesses.
Hmm.
And so we do a lot of serving the underserved. And that's a big focus and a mission for us as a business.
Right, right. Got it. Got it. Then I want to talk about the 7A program. Maybe you could just describe what that is for people who don't know. And it's become a big thing, particularly post PPP, where fintechs really stepped in with varying levels of success, obviously. But really, the bottom line is fintechs helped get the money out pretty quickly. Like you're in a perfect example, right? 200,000 businesses. That's a massive number of businesses that are getting loans. So there's been talk about expanding that. Many fintechs do it. You have one of the coveted SBA licenses that I think there's only like 14. You can correct me if I'm wrong, but there's not many when it comes to non-banks. So tell us a little bit about how you feel about expanding the SBA 7A program and describe it first.
And actually, before just to chime in, we do not have one of the SBA lending licenses.
Oh,
We
okay.
are what's called a lender service provider. And so what that means is that banks can outsource their different activities and services for SBA lending to us.
Gotcha.
But no, we actually don't do any SBA lending. Our banks do that, but our banks will outsource services to us.
Gotcha.
But to answer your question, what is the 7A program? So SBA was started about, 70, 80 years ago. And it's established as primarily to help small businesses in the country and really support that. And it's got support from both sides of Congress, which is fantastic. And the SBA has done and is continuing to do just a terrific job in supporting businesses. And for them to administer the PPP program during the pandemic, I mean, that was a Herculean effort, and they really did a great job. And specifically on the 7A program, PPP is actually technically part of that program. But the traditional 7A program is where the government will guarantee a portion of a loan and encourage that a bank to actually make that loan when they wouldn't typically make that loan. And so the program is set up to really incentivize a lender to make a loan that they say, gosh, I wouldn't normally do this. So if the government steps in and says, hey, we will offer you a 75 or 85% guarantee, or even a 90% guarantee if it's for an export business, if you'll go ahead and make this loan. And so if the loan goes bad, the government will cover that 75 or 85% of the losses on that loan, as long as the lender has underwritten it, packaged it, and serviced it properly. And so that program incentivizes banks and, like you said, a few non-bank licensed lenders to make SBA loans. And the 7A program goes up to $5 million loans, and it's got no minimum size. It does have a few different underwriting criteria that the banks have to follow. But largely, if the banks follow those underwriting criteria, they can set their own underwriting on top of that, as long as it is similar to their non-SBA loans. And the program S7A typically does about 25 billion or so of lending each year. The loan size has been creeping up over the years. I think last year, the Inspector General just came out and said, I think the most recent average loan size is like $680,000 or 700 and something thousand, but it's about in that range. We focus on much smaller loans, and we will help our bank partners with loans less than 350,000. Our average SBA loan size is about $200,000.
Okay. So then one of the big criticisms of the 7A program is that it is extremely onerous on the small business owner, because it's a heavy lift to go through all the documentation and all the requirements. I'm curious about what you've done to make that easier, and what is the typical time for the loan applications that come into you? How long does it take to get approved, and how long does it take for the business owner to get everything together?
It is a bit onerous. It has gotten better. We've been doing this now for about 10 years, a little bit more than 10 years. And so the SBA has continually made some improvements to streamline the process, especially for the smaller loans. But you asked kind of what have we done to make it better, and kind of what does it typically include? Well, each loan package, it could have as many as 50 documents per loan file. And what we'll do to help make things easier first is we'll let the business know up front if they're a good fit or not. And we'll also be clear on kind of what's required. But we do quite a bit around making document collection easier and also reading documents automatically. We've got software that can do that as well. And so we make the application process easier for the small business. And then we make the process easier on the back end to read those documents, be able to underwrite a file quickly and easily using automation. And so it not only saves time for the borrower, but it also saves time for the bank. And one of the issues that we saw with small SBA lending when we got into the business is that because of all the documentation that you mentioned, it would take banks just as much time and energy to underwrite and originate a $100,000, $200,000 loan as it did a $2 or $3 million loan. And so obviously they were more focused on the larger loans because there's increased profits there. And so we focused on bringing in efficiencies into underwriting and originating those small loans. Our banks tell us we can strip out about 90% of the costs versus their traditional retail side. And so making those small loans profitable is the key to getting banks to say, yes, I want to originate these small SBA loans, even though there is a fair amount of paperwork involved. So there's sort of two sides to the efficiencies.
Right. Gotcha. Okay. So I want to talk about Cross River Bank, and given Cross River are also very active in the PPP program. Tell us a little bit about how that partnership came about, and are they doing anything different to your typical banks that you work with?
I've been chatting with the folks over at Cross River for years. Really impressed with that bank and their team over there, as I'm sure a lot of folks in the industry are. And the way the relationship came about is they are looking, I think one reason with PPP lending is they're looking to get more into more traditional SBA lending. And as you know, and the listeners know, they're tech forward. And so when it came down to a partnership, I think we both thought we would be a good fit for each other to help them scale up their small SBA lending. And so we've kicked off that partnership and it's going well. But that's really how it started. I think, again, coming out of PPP, they were looking for ways to do more SBA lending, and it's been going well.
All right. So you're only working with banks, right? And obviously there's other credit unions do small business loans. There's other financial institutions. There's direct lending that happens. Are you only working with banks when it comes to funding loans? I mean, I'm just talking, obviously SBA has to be with banks. I'm thinking about the other products that you have.
Yeah, look, our main focus is on helping businesses get bank loans, whether it's SBA or conventional bank loans. If we can't help somebody get a bank loan, we do have a network of second look providers. And so we will absolutely work with non-banks to help our clients get a non-bank loan if they can't get a bank loan.
So then you obviously work with a number of banks. When someone comes to your website, I mean, I imagine a lot of banks' credit boxes are pretty similar, but they're not going to be identical. How do you decide where to send this if you've got 20 banks that have the same credit box that would fit this? How do you decide where to send these loans?
Yeah, I mean, for SBA, it's pretty standardized because our banks all charge the same amount and they've got similar pricing and terms, but they do have different credit boxes, surprisingly. So we have many clients that don't work at one or two banks, but do work at another bank. So that's easy. I think the tougher piece is, well, what if it works at 3 banks or 5 banks or something like that? And we want to make sure that there's not one bank that's more of a favorite versus another. So literally we have a random number generator that will pick a bank. So they'll come in, they're looking for an SBA loan. It gets this random number assigned, it goes to this bank, and then it'll stay with that bank.
Right. So when people coming to your website, I mean, obviously anyone can come there. And if you're doing TV advertising, you're getting all kinds of different companies coming in. And SBA, as you know, it's, as you said before, it's for well-established businesses. It's not for startups. It's not for those that are teetering on bankruptcy. Is the quality coming into your website, does it sort of reflect the population of businesses at large? Or I'm just wondering about kind of the approval rate, shall we say, on what you're offering.
We certainly attempt to target the right businesses. We don't want to waste businesses' time if they're not a good fit for the products that we're offering. And so with our marketing, even if it's an SEM ad or something like that, we'll actually put in that SEM ad the criteria that somebody needs to have for us to help them. And if we can't help them, they can answer a few questions and attempt to pre-qualify. And if they don't get pre-qualified, they'll have an answer very, very quickly. So we find that a fast no is just as important as a fast yes, because we don't want to waste clients' time. That's really how we do it, Peter.
Right. Okay. So then when you're talking to your bank partners today, I imagine you're continuing to talk to new ones. I mean, I imagine the pandemic was pretty good for you guys, because I'm wondering if the mindset shifted, because you run a technology company, you're an online operation. There are some banks that probably thought, well, I'm only going to do loans that people who are in my local area who come and sit down with me. But when that wasn't possible, they needed a solution like yours. I'm just wondering, did that really change the mindset of bankers over the last couple of years?
Yeah, it really did. I think what we saw pre-pandemic to during and now post-pandemic, a couple things that we've noticed, I think, changed the most. One is largely we found that banks, if they were doing PPP, and a lot of them did, they were helping their existing customer base. And so what we found coming out of the pandemic is banks saying, hey, I just helped 1,000 customers get a PPP loan. I have a deposit relationship with these folks, but are there other products and services that we can, help provide for them? And so we have had a number of banks contact us for more of that white label offering that I mentioned up front, where a bank has said, hey, I want to help my existing customer base get a small SBA loan. And they realize that many of their customers might have $1 million a year in revenue. And even if they're focused as a bank on large loans, they don't necessarily have the product line to help that smaller business that's in the bank. So we saw that for sure. So that was I think a flip in mindset. And then the other, certainly that not just in banking, but in pretty much every single industry around, is the digital transformation and just the focus on and the expectation from customers around having an online offering and a user experience online that's easy and that folks can use in their home versus going into a branch. But that same thing happened in every single industry out there. It certainly happened in banking.
Right. Okay, then. So last question. What's next for Smartbiz? What are you excited about? What's coming down the pipe?
Well, I'm really excited about the line of credit that we were talking about before. That we launched it middle of last year, and we're finding that it is really helpful for our business customers to be able to get an interest-only payment on a credit line. It's unique. I know Wells Fargo has one, but it's hard to get Wells Fargo's. And so I'm excited about that. I'm excited that we're into SBA. I think if there is a recession, that is a product line that has proven that it withstands a recession well, both for businesses and for lenders. And certainly there's help from the government with that guarantee. But I'm glad to be in a position where if there's a recession, we'll still be able to help businesses. And I'm excited about the ERC opportunity. We've been helping a lot of businesses, and the stories we hear from our customers are, a lot of folks didn't know that they could actually get this credit. Every business should get it if they can, especially now. It's a way for them to get some liquidity in place before a potential recession. Super important. Those three from a product standpoint. And then just from a tech standpoint, I'm excited to streamline some of those offerings. So we're investing in automation. We're also investing in data from a credit risk standpoint. You had asked about performance earlier. We are able to consolidate performance across multiple lenders and across multiple different loan types. And that helps us expand a credit box in a way that doesn't actually hurt performance. And so we can say yes more, which I think is really beneficial for us to help our underserved small business customers.
Right, indeed it is. Well, we'll have to leave it there. Evan, thank you so much for coming on the show today. Great to chat with you again. And you're doing important work. Best of luck to you.
Thank you, Peter.
If you like the show, please go ahead and give it a review on the podcast platform of your choice. And be sure to tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.